On to the other big story that we're tracking this evening. A panel of state ministers led by Gujarat Finance Minister Nitin Patel has recommended that 5% GST without input tax credit be levied on under-construction residential houses. Now, remember, under-construction properties are currently taxed at 12%. Further, the GoM has recommended a 3% GST be levied on affordable housing without input tax credit. So what impact is it going to have on the real estate sector? Shireen Ban joins us now with two very special guests. Over to you, Shireen.
Well, thanks very much. Joining us now, Rajiv Talwar, the CEO of DLF. Also with us, Prateek Jain, leader indirect tax at PwC. Gentlemen, thanks very much for joining us. This has been the recommendation of the group of ministers. It will now be up to the GST Council to ratify this. Usually they go along with what the GoM says. But Mr. Talwar, let me start by asking you, the decision to allow 5% GST without ITC for under construction properties, also decides to recommend 3% GST for affordable housing without ITC. How significant is this going to be?
Good afternoon to you, Shireen, and good afternoon to your viewers. I think it's a very valuable piece of recommendation for one reason which probably you've missed out, and that is that 80% of the material which will go into the construction of any building will have to be taken from GST registered dealers. So this would be the best method, whether it is for affordable housing or for any kind of housing and construction, that buildings which are going to be made will be in the regular streamline and the line of GST, and eventually will fall prey or become a part of the market which is considered above board and which is totally regulated and recognized transaction. So I think this is a very valuable recommendation. Yes, only one point to be made along with it, that all the contracts currently attract a GST of 18%. As you know, the developers are a separate company, whereas contractors are very often a different company. So I think this is time that even contracts for construction should be brought into the 12% GST slab rather than keeping them at 18 at the moment, which is at present. So I think along with this, if it comes about, it will be something which will get construction, housing and real estate into the mainstream economy rather than what was supposed earlier, that there was a lot of money being parked in that sector.
Okay, what is it going to mean as far as the consumer is concerned, Mr. Talwar? You gave me a sense of what this means for industry, but what will this mean for the consumer as and when this is ratified by the GST Council?
Yes, for the consumer, it will mean a clear transaction. This money will be going back to the government. It will not go to the developer or the real estate company. It will go to the government, therefore a consumer at the lowest level, because 90% of our demand is for affordable housing, which has been kept at a very comfortable level of 3%, and therefore this become contributors to the mainstream economy and to the revenues of the country. But at the same time, they will also be participating in getting the entire supply chain into the GST net. And I think with the revenues rising...
No, but I was asking whether this is going to... Fair point, but I was asking you specifically whether this would in fact bring in some more relief as far as the consumer is concerned on pricing.
I don't think it will have an impact on pricing at all. There was a certain levy which was being paid earlier. After all these were subject to service tax, and they've done it. Everyone used to say that about 4.5% is always there, even with an abatement which was so large as 66%. But I think now what will happen is that they will be given a relief. So therefore, there will not be an impact on the affordable housing segment, and 5% is about what was being charged earlier. And you know, even earlier it was being passed on to the consumer. It will remain at the same level. So I don't think it will impact the prices adversely. But yes, it will be a very major step for getting the entire sector into the mainstream economy and into the white economy and from the entire supply chain. So I think overall with 200 industries which are supposedly supplying to the housing and construction sector, it will be a very major impact on the revenues of the state.
Okay. Okay, Pratik Jain, what are the challenges that you foresee with this? And we've discussed this business of, doing away with the ITC. We saw it for several other sectors as well. What would you see as the big challenges as and when the GST Council ratifies this recommendation of the GoM?
No, several challenges. I don't think that from a policy standpoint it's a good idea. I think it's a quick fix solution. It's never a good idea to restrict input credit for any sector and more so for real estate, because real estate is a sector which you need to formalize more. It basically incentivizes the real estate player to really get the cash component back. And also what will happen is that your base price will need to increase. So let's say if you're selling at 5,000 rupees per square feet and you're applying 12% tax, and let's say 300 rupees per square feet as your, let's say, input credit, you have to increase the base price from 5,000 to 5,300. And then the customer will ask is why base price has increased, and you will say my input credit loss, and they will say, okay, show me the proof. And we have seen that in restaurant sector where anti-profiteering has become a big issue for the sector. So any customer can go and file a complaint that I'm not sure why the base price has been increased. So it complicates. And also, when you tomorrow, after 6 months or 1 year or 2 years, if you want to get this sector back under mainstream GST, then it will be that much more difficult for the government. So instead of doing this, and even if composition has to come in, maybe there should be an option provided to the industry that if they want to follow the mainstream but with input credit and all that, then reduce the tax from 12 to 8 for the sector and give them an option rather than making it compulsory. The only good thing which I think has happened, and I have not seen of course the recommendation, that if the recommendation is that 80% has to be bought from the GST registered vendors, then at least to some extent it would mean that you're dealing with more compliant vendor ecosystem. But that is only the recorded purchases. What happens to the purchases which are not recorded at all? And obviously monitoring that 80% itself.
Yeah, that was the point that Mr. Talwar was making.
For a quarter, for a year, all of those things come in.
Sure. Mr. Talwar, very quickly comment on what Pratik has just said, that we are likely to see a base price escalation and the challenges that, Pratik foresees, which we've seen happen with the restaurant and hospitality business of there not being any ITC, could possibly lead to anti-profiteering concerns and litigation even.
Shireen, you know that Pratik is an expert by himself, and therefore all of us do value the words which are mentioned by Pratik, and he's very correct that initially we had also recommended that it should be 12% with 1/3 abatement for land prices, and therefore it should be ideally an 8% with input tax credit. But I think the government has found it easier to levy a condition that yes, 80% of the material be brought. Let's get the entire supply chain into the GST net, see the increase in revenues, and perhaps then take a decision at a later point of time on the other housing rather than. I think they're really looking at how do you fulfill the promise of housing for all by 2022, and therefore a need to have a quick fix solution which is acceptable to the buyer and as well as is
Okay. All right, Mr. Talwar. Pratik, a quick final word from you. We don't have a date yet of when the GST Council is going to meet, but what would you like to put on the table for consideration as and when they take this up for discussion?
My recommendation is that they should reconsider this, and if at all composition has to come in 5% without input credit, then at least provide an option to the industry to go for a regular scheme, and also provide clear guidelines as to what happens to the input credit, from which date, etc. What happens to the opening input credit, which I have, how will I set off that, because I don't have ability to set it off now. So provide clear guidance as to how this scheme would operate. And from an industry perspective, I think they need to very quickly compute what is the input credit loss and how the base price will increase, and communicate that to the customers very clearly, so that they don't get into disputes on the anti-profiteering front.
Yeah. Profiteering side. Well, there is a confusion on whether we will see a base price escalation or not. Prateek believes that we will. There are other experts who believe that it's unlikely that we will see a base price escalation. Mr. Talwar also believes that there's going to be no changing on pricing. But time for us to head into a break. Gentlemen, appreciate you joining us here on the CNBC TV 18 special discussion on the recommendations made by the group of ministers on GST.